Good afternoon, traders and investors. It's Will here again with another daily market recap. Got a lot to talk about today. So indexes doing absolutely nothing, furthering their consolidation. We had some earnings from FRC. I don't know if you guys made plays on that, but I definitely did. And crypto continues its decline. So without further ado, let's get into some charts here. So as we can see, guys, the S&P 500 on the weekly time frame here, as I was saying before, we are expecting some potential either one of two things: the weekly consolidation move, or we are just going to continue to tighten up this range and potentially break to the upside, pending some good earnings from our big tech names this week, guys. Got some very, very big week. Microsoft, Amazon, Google, Meta, and a bunch of other stocks in other sectors that you guys maybe pay less importance to, but I definitely look at a lot. So that's on the table for this week. And what's going to happen? See, as you can see, guys, at the daily time frame here, we're still grinding up our classic 12 EMA that I've been saying now for the past 2 weeks, pretty much. On the 4-hour, we are still kind of in a 4-hour downtrending channel. So as you can see, we are respecting the upper end of that channel here. No real movement on the day. I mean, we did get some lower end movement on the morning. And then, as per usual, bulls just started buying the entire dip up again. It's as if these markets just refuse to close later. That's kind of been the theme, guys. Whenever we gap down in the morning, we get bought back up into the late round of the day. Or when we move higher on the morning, we slowly sell off, but we have ended positive pretty much. As you guys can see, a lot of this time, guys, we've ended up positive, or at least, the bears start off a big sell-off, then just can't follow through. They just can't follow through. So everybody's expecting earnings this week. And I think that's, like I was saying, it's going to make or break this range on our SPY. So keep an eye out for that. Further downside levels would be around here, around the moving averages, 406, 405. And to the upside, obviously, we're going to break this range. Next stop would probably be around the 420 area. Looking on the NASDAQ now. So on the NASDAQ, we are still in a weekly bull flag. I mean, it's definitely not anything pretty, guys. It's been really, really, really flat for the better part of the last 4 weeks at this point. Look at this tight range, such a tight range. I mean, we are below our 12 EMA right now, still riding the 26, and we are still kind of sitting on this general support level here, right? So until that gets broken to the downside, we can't be confident that we're going to get our further pullback to the weekly, expected down here. And what's going to happen is the tech names are either, once again, kind of like on SPY, because they represent such a big weight, we're either going to confirm this weekly bull flag to the upside with our next stops around here, or we're going to break further to the downside. And there's still a lot of room, guys. Don't get me wrong. Still a lot of room to further continue to the downside here while playing into this big demand zone, right? So overall, still bullish. Bulls with a lot of space above our higher low up here. So we really need to see what's going to happen next, 3 days, right? So we have Tuesday, Wednesday, Thursday are going to be our biggest days for earnings. As I was telling you guys, I have loaded up a few positions into this week, but very, very, very light. And I'll show you guys later. This is very, very light, maybe about 20, 25% of the amount of capital that I would be deploying on a regular week. So I'll show you guys what I did. Still got some positions just in case we do get the bull move, but I also do have some short hedges on play, but very, very, very small, guys, risking very, very little capital this week. Dow Jones, kind of the same thing, right? So bulls are fairly confident now that they've regained almost this entire bear move, and we're consolidating now at the highs here, holding the moving averages on the weekly. On the daily time frame, we are somewhat starting to confirm our daily bull flag potentially. So very, very bullish doji candle on the day today, rejecting from the 12 EMA, still flirting with this upper end of the range up here. And like I'm saying on the Dow Jones, guys, I mean, we really don't have that much, to get back to all-time highs. 7-8% at the most, right? So this chart is looking very, very healthy for a lot of the more defensive names, right, in terms of the Dow Jones. So if you guys do have any of the more defensive names, congratulations on that. Your account should be looking pretty good. We're talking about names like McDonald's or Coca-Cola potentially. Like, look at these guys. They are all really, 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 really bullish charts. And this, to be honest with you, this is a very massive inverse head and shoulders, if I've ever seen one, on Coca-Cola, right? So potential further upside and a lot of the more defensive names, the names that traditionally do well in recessions because they represent products that people can't really easily substitute away from, right? So now looking at the Russell, Russell is by far the most muted index. It's supposed to be the most volatile of them all, but it's really been doing a whole lot of absolutely nothing. So as I've been saying, guys, we're still consolidating here at the lower end of this range here. What I really want to potentially see, if the other three indexes come into a weekly consolidation move, I want to see the Russell move down into this area. And you already know, if you've watched a few of my previous videos, we're going to be looking for IWM in this little range here. I want to be a seller of puts, meaning I want to buy the stock. I want to buy the index down here. It's a really good area. As you can see, this is support area, used to be previous resistance for a long time. And now we've been sitting on it 1, 2, 3 times, right? Very, very, very wide range. But if I do get some opportunity to pick up to write some premium down in here and pick up some Russell on the IWM, right? So that would be an ideal location, one of the most ideal locations that I'm looking to pick up any index in general. So now let's break down SPY. So let's look at the different components. Financials with a very muted start to the week here today. As we can see, guys, I mean, still kind of in a technical daily bull flag, right? Got this big move up, now making this little flag down. Really no major news out of financials today other than FRC earnings, which we'll tackle at the end because that was one of my trades of the day. I played earnings on it. Very conservative play, however. And, you know, what we're going to need to see is bulls are either going to be able to confirm this, which our next target would probably be up here, or first target probably near this 200-day moving average up here. If they lose this pattern, however, they are going to be looking for some further weekly consolidation. We've now been up pretty much 6 weeks in a row, right, without any much pullback. If you do get some pullback, look for the higher 32 areas, which would coordinate with our 200-week moving average that you can see on this screen, this blue line. I should probably make it a bit brighter blue line, but I hope you can see it down here. It's right around here, guys. So, you know, any consolidation move like this would just set us up for some potential weekly trend reversal. We would want to confirm the weekly uptrend in financials because, as Congress keeps saying, the banking system is strong and resilient. So that's pretty much it for financials. Moving on to healthcare now. Healthcare starting the week strong. Like I said, healthcare does very, very, very well traditionally, guys, in recessions. It's a very defensive industry. A lot of these stocks pay very good dividends. And like I said, I mean, in recessions, right? Why does healthcare do well? Because people have no choice but to pay for healthcare, right? What are you going to do? Not go to see the doctor, not have an operation or stuff like that when you need it because it's in the midst of a recession? No, you can't really substitute healthcare away. So healthcare has been making a really strong push here. We're not really overbought on the weekly, not really overbought yet on the daily, although we had a nice little bull flag here, which is now confirming. So remains to be seen if we can continue this daily uptrend or if we potentially continue to flag a bit here above this massive support level that we're now sitting on, right, guys? So healthcare looking quite strong. Few of the names that I like in healthcare a lot for some potential recovery. This is probably my favorite, CRL, Charles River. Very, very, very big stock, good stock, trading under all of our moving averages. Look, under the 200-week moving average. Look how long it does that, guys. How many times in the last 10 years, other than the recessionary period, 2008, have we traded consecutively under our 200-week moving average? Not that much. So as you can see, guys, we've been accumulating here for the better part of the last 6 months in this lower range area. Well, now we're actually towards the lower end of the range. So I'm not opposed to potentially be writing some premium down into these levels, right? So the mid 180s to mid 190s seems to be a very good area. I'm looking into it, but like I said, guys, I'm not going to load up too much size before the end of the week. I want to see these earnings and how SPY reacts, because if SPY reacts negatively, you may not see the rotation. You may see all sectors dropping at the same time for some pullback on SPY. So that remains to be seen. That's why I haven't done it yet. If they would have opened, if we would have gotten a nice red day today, I might have done it here, but I really want to get this thing right in the 180s to 190 area. I want to be writing some premium on this. I'm not yet ready to throw some long call options on it yet. So now let's look on to the big tech names. Apple refuses, got to hide that a little bit. So Apple refuses to break down. It just refuses to break down. We had a bearish close on the doji candle last Friday. And as you can see, the bears came in strong today, right? Dropped it right at the open pretty much, right on this 200 hourly moving average. And then they shot back up and regained the shorter moving averages here. So apparently dips are still for buying, even though we have the premise of earnings coming up later this week. Apple still in a weekly, right? Weekly and daily uptrend. So not much to say here until we potentially break this guy here or potentially make something like this and then come into lows, right? So that is what you want to see for a breakdown on Apple. As you guys can see on last Friday, what happened with me is I actually bought a put debit spread. So I'm betting on Apple coming down. If it does come into my supply zone here, I may consider closing the trade if we get a close above 170. So keeping an eye on that. I'm looking to play the Apple weekly consolidation. I'm not bearish on Apple as a company as a whole. I just want to see a bit of weekly consolidation, potentially towards these moving averages in the low 160s area, potentially maybe mid 150s. If we get to the 160 or mid 150s, I'm closing this trade. So just to make that clear. But as of now, weekly bulls are still in control. Daily bulls are still in control. This thing probably will move off of earnings. It has earnings next week, not this week, but we do get earnings from all the other major tech. So it might get dragged down as well if those are bad. Moving on to Amazon. Now, Amazon in a very peculiar situation here. So we've had the pre-earnings run up. Arguably, we've had the pre-earnings run up, right? From 97 all the way to 107, right? That's about a 10% gain since pretty much last week, right? Almost about, just over 10%. And rejecting off of this 200-day moving average here. Bulls were seeming to struggle a bit today. As you can see, we opened a lot higher. Right at the open, we got this big push up in the 109s, came back engulfing, and now, we may be looking at something like this. It could happen because there is big support down there, so we may want to come test it again. All is dependent on the earnings on Thursday, right? So we're going to see what happens with Microsoft, Google, and Meta, but Amazon does have a bit of room to come down. However, for now, we're still in a weekly confirmed uptrend, and we're still in a daily confirmed uptrend as well. So nothing to be nervous about, guys, on Amazon until we see a pullback into some of these potential deeper levels here, at which point we may need to reevaluate this chart. For the upside, we're looking most likely at 114, 115 for further continuation of the upside. And downside, like I said, is if we come back and test this guy around the 98 level, well, we could potentially be in for some consolidation. And if I show you that yellow line on the weekly chart, it basically looks almost like nothing, right? So it just looks like a weekly consolidation move, still a lot of room to actually make that move happen. And I wouldn't be opposed to writing some options down here in my lower green box if we do get that pullback. Now, taking a look at Google. So Google, very, very, very decent chart as well. Weekly uptrend still, however, slugging around here at the top end, but that's normal, guys. This whole area here, look at all this, right? Previous support is now resistance. We've now tested it twice. So this is going to be a very, very big area to make or break, right? Earnings tomorrow. So be very cautious if you have positions on, especially shorter term bought options. If you guys are buying calls, buying puts, so be very, very careful on those. I'm not personally making any, I'm not going long options on any of these earnings. I'll show you guys what I did make plays on. They're all written options, all short options that I'm doing. So Google still kind of stuck in this range here. We do have confluence of our moving average down there. We're now closed above the 200-day moving average, something that hasn't happened since pretty much the drop started in April of last year, right? So this is the first time that we're really healthily closing and staying above these moving averages. Google really wants to hold these. If we do get a pullback on earnings for some reason, like I said, this green box is the area of contention that I'm looking at. And on the weekly, as you can see, guys, on the weekly, it looks a bit prettier. So if we do get a drop like that, as you can see, we're just looking for pretty much a weekly higher low. So much space compared to these guys, compared to this down here. And I would be hard pressed to believe that we go test those levels anytime soon. Obviously, anything's possible, but bulls apparently now still in full control. So those are the targets to the downside. Next target to the upside, obviously, we're going to be looking at this supply zone right here, which lines up with about the 115 to 118 range. That will be the next target if bulls do continue, right? This bullish move to the upside here. Potentially, you know, it's all earnings. Obviously, guys, it can also do nothing for earnings, right? But I'm just saying, if we're going to get a big move off of earnings, then we're either going to come down here potentially, or we're going to have to break this resistance and come down here for a weekly consolidation, or break up here for weekly and daily continuation of the upside. Now, Meta, taking a look at Meta before their earnings. Now, look at Meta, right? Compared to all the other ones, the RSI here, we are kind of hot, guys. This has been how many weeks now, right? Now, yes, there was some consolidation here, but this, I mean, what a weekly move, guys. We're talking over 100%. Over 100%, right? This has to be 130% move, right? So at this point, we haven't really got some meaningful weekly consolidation. We got some up here where it kind of did like a bull flag, sat on this area right here, right? So we sat on this area and then continued the move to the upside. Now what we're going to have to do is the bulls were closed above the 200-week moving average. You can see that blue line right here. So we're slightly closing above it now still. This could either do one of two things. We could either confirm another weekly bull flag and push higher to our next resistance target, which would be this guy. And after that, not a lot of resistance, right? Not a lot of resistance because this whole drop was off earnings. So this on the daily should technically be a gap, right? So not a lot of price history in this range. If we do pull up into that range, it wouldn't surprise me if Meta can potentially go towards closing that gap. But since we've run a lot, got to give this chart the benefit of the doubt, right? If we do want to then push up in this whole area, it stands to argue that we may need a bit more consolidation before putting in a monster third leg up, right? So first leg, second leg, we may get that third leg up, but depending on what earnings does, we're either going to shoot up into this area and, you know, we're going to reevaluate to see where our price action is going to take us after that, or weekly consolidation, which is the move I would most want to see, especially for writing options, would be something like this. Right, if we can come back here, test this support level, right, about 195, that would be an ideal location. You know, if I'm trying to write options on it for me personally. Obviously, none of this is financial advice. Now, the last one that I wanted to go over is Microsoft. So last one that has earnings this week. So Microsoft, once again, guys, tons and tons of space. This is our weekly high or low, right? Tons of space. Now it's making a bull flag pretty much. Weekly bull flag now for about 4 weeks in a row. As you can see, Microsoft is not giving up a lot of its gains at all. It's kind of using this whole area here as support, still a ton of space. So if we, as you know, the longer we come up here, the moving averages will get closer and closer. And now you see, if we're looking for weekly consolidation, like I was saying in my previous videos, I like Microsoft in the 260s to 270s, which would put us right here, which would be very healthy for the bulls still, but it would be some much needed weekly consolidation. Daily chart as well, as you can see today Microsoft pretty much went down 2% and then recovered a lot of it intraday and then kind of closed right in the middle there. So daily, not looking the best since we did close, you know, below this area right here, which we didn't want to lose. Weekly, it is still a bull flag, yes, but now we're getting close to the lower 26 moving average. So that's why I say, guys, if for some reason earnings doesn't go that well for them, well, then we have targets right here, big support area right here. We have our 200 MA right here. So a lot of things that can help support price at these levels. Doesn't mean Microsoft is going to go in a straight line down like this, right? So a lot of price support in the 270 range. Then we got our moving average down here in the 260 range, right? 200 day, which is nothing small. So still a lot of room for Microsoft for any consolidation. To the upside, if we do break to the upside after earnings, that would put us into this supply zone right here, right? So right around the 300 area would be our next target to the upside. If we do get a bullish reaction, this resistance will be taken away. And at that point, I'll want to see something like this, the breakout, then the retest. And then off the retest, I make a play here, put the stops under the low there. So that's how I trade, right? I don't like playing speculation of the breakout or not, right? I'd rather be writing puts down here. Like I'll show you guys, that's exactly what I did for this week. Not too much size though. Well, a company that I wanted to bring up as well, it has earnings tomorrow, which I do have. Oh, these lines are kind of old, so I'll take those away. So one company that I am making a play on earnings is tomorrow is Enphase. Enphase, I wrote the 190 put, which would be below our lower end of the support range after this big drop here, Enphase is a very good company, very good growth prospects over the next 5 years, profitable company as well, in one of the niches that you really want. So they're in renewables and solar energy. They have solar inverters and solar powered, essentially basically accessories for that whole industry. And very profitable company. It is an institutional favorite in the space as of late. As you can see, guys, we are closing above this downtrending channel at this point now. So we did have a pretty, this day today, it started off pretty red. Enphase was red about 4%. Now we tested those short-term moving averages now as support, which is the first time since this big drop, right? So this is like 4 months, guys. 4 months. Whenever that happens, you have to take note of it. So that's what I did. I'm taking note of it, right? I was writing puts last week and holding them into this week. I was actually writing back here, but this was before the channel even started. We had written some about 4-week out puts, right at about 200 and the 190s as well for about $15 and $11 respectively. Those eventually off this pop became worthless. And now I've redone a few of them here at the 190s. So 190 put is going to be my level that I'm looking for that support area. Earnings can either do one of two things. It can either take us down back into this area for retesting some of this levels, right? Because now we've set the daily uptrend, but we need to confirm the weekly uptrend. Need to confirm it, right? So we haven't confirmed it as of yet. I'm going to be looking for earnings tomorrow to do that. If we do get a push to the upside, our further targets are going to be this guy right here and this guy right here. So pretty much in the 250 area. Right? 250 area for the next push to the upside. Downside levels pretty much in this little pocket here. Anywhere from 200 all the way up to about 210 would be a decent, weekly high or low compared to this guy down here. Now, NVIDIA. What can I say about everybody's favorite stock, NVIDIA? Well, I could tell you that the call credit spreads in the 288 range weren't paying enough premium for me to actually take the risk this week. So NVIDIA dropped a bit on the morning, came all back pretty much, engulfed the entire move back, and we're basically no worse, no better than we were on Friday, right? Look at Friday's close. We're almost exactly at the same level. NVIDIA, it's just like every time the bears want to short this, every time they think they're getting some momentum to the downside, the bulls just buy the dip in their face. So you don't have to be catching this move, guys, from the absolute top and whatnot. Like I said, if you do want to short this, you may as well wait, right? Look at this perfect range up here, right? If you do want to short this, I'm looking for something like this, right? So not financial advice for you guys, but if I want to short this, I'm a more cautious bear. If I want to short this, I want to see a break to the downside, breaking our moving averages, come back up and test. Then I will take the short here, put the stops above here, because I'll have confirmation that at least we've confidently lost the daily uptrend and the daily upwards momentum. We have RSI working in our favor. MACD is curling over, right? RSI can curl over. The MACD, this is the weekly chart, guys. The MACD can curl over as well. And at that point, you guys may say, yeah, but it's still bullish. I completely agree with you. It is still bullish. But if we break this range, retest, and then come down, well, we still have a lot of space before this guy. So it's going to take a while, guys, for us to be in a weekly downtrend. I can agree with you on that. However, there can be a shorter term, short opportunity, essentially, that I will be looking to profit off of, but I'm not going to keep trying to pick highs, guys. The best that I'll do is write some call credit spreads up here when we get some decent enough premium on them. This week, there wasn't a decent enough premium on them because we started a bit too low. But as we approach up here, I have no problem writing some call credit spreads in the higher 280s to 290 range because that's really the top end of our current move. But for a net short on shares, I showed you guys what I'm looking for. I'm looking for the pattern breakdown like this, retest, and then I short from here, and then I put my stops above there. It would offer about a 2-to-1 risk to reward, and that's good enough for me, but I gotta stay patient with it, right? So now let's get into the plays that we're looking for this week. Like I said, guys, not putting much on, but we are putting a bit on. So I didn't really want to touch anything except for the big earnings plays. Why? Because there's a lot of premium on them, and when SPY and the VIX is so low, there wasn't a lot of premium. Like, I'm not going to play PayPal knowing that earnings for the big tech could potentially push down a lot. And then you would get some highly volatile moves on all the other things like I somewhat play, right? Like ON Semiconductors or PayPal or, anything else basically that's in the sector, or Intel. I was even looking at Intel today, right? Be writing some puts down here, but I'm thinking like if we get some big moves on earnings, guys, like these will just get dragged down, in multiples, like 2-3x what, other things could potentially, what the indexes will be dropping off of it, right? So that's what I want to wait for. But as I'll show you guys, I mean, we still have this put debit spread on Apple, which is live, right? As I showed you guys, we still have the put debit spread on the S&P 500. Put debit spread on the S&P 500, looking for downside continuation. I did as well do calls on the VIX. So you guys could see the yellow line where I placed my call order this morning. So it didn't get the low of the day, didn't get the top of the day, got right about in the middle. So as you can see, guys, we have the call for the VIX. It's a May 9th, right? It's about 2 weeks from now. It's a May 9th call, 16 in the money. My break even, 1850. 1850, where does it put us? It puts us right about where my cursor is right now, right? So that's not asking too much for the break even. 2 weeks out, and what happens in the next 2 weeks? This week, massive earnings. Next week, Apple earnings, a lot of other big earnings, and we also get Jerome Powell. So as you can see, guys, like I was saying, we do have the VIX trade here, the in the money call 2 weeks out. We have the SPY bear put spread, as I was saying, for the downside hedge. We have the Apple bear put spread, but not a lot of size, guys. As you can see, only one contract. I usually trade multiple times more than this, but we're going light. We're keeping most of the account in cash for this week and potentially even the next week. We're not writing a lot. Even FRC, you guys can see, like, I wrote so small on FRC just to participate. So everybody was betting on it so heavily. The implied volatility on this option chain for this Friday was 300%. So before, when I wrote these, the stock was trading about 1550-ish. Late afternoon, I wanted to see what I was going to do during the day. It ran up, so it gave us extra cushion. So you guys can see I wrote the 9.5, 9, 8.5, and $8 put, right? So that puts my average right around, it's about 860-ish if I were to be assigned the stock, right? Because of all the credits that I got. Equally weighted, and if not, I would have had to buy pretty much, like, let's call it, just for all intents, $3,500 worth of stock, right? At the lower end, but at that point, pretty much all-time lows for FRC. So I was okay with taking that risk. And as you can see, guys, FRC after hours, they're only about 1280. So these puts tomorrow will be essentially pretty much worthless, right? So I was betting on a 50% drop, 40 to 50% drop on the stock, and I love selling options to people who think that these will print money. The only chance that these would have printed money is if they flat out would have said that they were in bankruptcy risk, but the Fed is backstopping them. They still have, I was looking at the deposits, right? So most of the deposit flight from FRC happened in March, but April so far has been relatively good, and they've been solid on that. They're backstopped pretty much by the Fed. And this company, before this happened, right, they had a very, very, very solid revenue and margin profile, right? So it stands to argue that they do know what they're doing in terms of that. Interest rate hedging didn't play out too well for them, obviously. However, I love selling options to degens, essentially, right? When I see 300% implied volatility, what's the risk for me, guys? The risk for me is almost nothing, right? I'm trying to collect a bit of premium, which is absolutely ridiculous premium, right? So this is like 2% on this one. This is almost 3%, right? This is almost 3% on this option. And this as well. This is over, this is probably exactly 3%. So every one of these options, I could have gone a lot more greedy. Could have wrote the 10s, 11s, but no, I chose something very safe because I don't like playing these plays. So when I play them, I have to be compensated for them. So that's why I did these ones. Very, very boomer options. You guys could tell me, like, Will, why didn't you write the 10s? There was way more premium on those. Why didn't you write the ones from next week? Because, guys, I don't like playing these plays, but I do them when the price is right for me, right? So when the risk reward is good, when I'm risking very little for a massive move in the stock, right? And I'm getting at least compensated with decent premium for such a massive move, then I'll play it. And as you can see, guys, tomorrow these will be worthless. So I made a quick, not even $100, right? But, it is what it is. So On the other side, you guys will see that I did make a few, I had some starter positions in here. So I have the end phase like I was talking to you about, not too much size, only one because earnings are coming up. You'll notice that with me, guys, when I do make plays on earnings, the price has to be right for the risk, but also I won't go with heavy size, right? Usually you'll see me with like 5, 6, like 4, 5, 6 Amazon contract, 4, 5, 6 Google, a few Microsoft as well. Tesla, I'll be going in like last week. Tesla, I'll be going in like 3, 4 contracts deep, right? But for this one, the Tesla, I don't need to explain it again. I was covered up from last week after the drop. I wanted to solidify my loss, right? So now Tesla can drop all the way to 145 and I'm good. I'm covered, locked in 163 from 170, right? So I got the credit from 170, it was about $1.70. Right, $1.70. So that puts me about 160. Let's call it 168.5-ish, right? And then I locked it in with the calls here for about $18. So that's 163. So we're only locking in about a $550 loss, right, on Tesla, which is meaningless in the grand scheme of things for me, at least how much I play this stock usually with how many contracts I do. And so we wrote some Coinbase 43s, guys. The stock is literally at like 55-ish. So yeah, 55. So this stock has to drop an additional 20% this week for me to actually be filled. You know, crypto can drop a few more percentage points for sure. But if Coinbase drops down another 20%, I would be very impressed. I could probably eat my words by Friday, but let's see. But just to say, I opened 2 contracts because if we do get down there, I don't mind holding only 200 shares of Coinbase. It's not that much for me. We do have some good support down here. And if we do get down here, I'm expecting a big potential bounce. So that I can at least either get out on pure shares, selling back shares, or the covered call premiums on Coin are always really, really juicy. So very, very small position this as well. Amazon, 94 puts. You guys saw where Amazon was trading at, right? Amazon trading at about 106. So I'm writing the 94s, which is right down to this area. Like I was saying, I want this area for Amazon. So I did a little starter position, right? Tiny little starter position on Amazon. Not that risky at all. Maybe about 0.3%, 0.4% per week. Not that much, but premium was good. For the amount of downside that they need, the premium wasn't that bad at all. You could never get that premium if it wasn't an earnings week. Google, same thing. This is about a 0.25% on the week, right? One little contract of Google. You guys saw where Google was. Google was about 106. I'm writing down here at the 97 range. So right down here, right where I'm telling you guys that weekly consolidation could go if earnings are bad. And if not, so be it. At least I made a play on it. Usually I don't play earnings unless I get compensated decently. And as long as they're within my levels that I don't mind buying stock at, that's when I'll play them. I definitely won't play Nvidia earnings when it's way up here. Right? I definitely wouldn't play, even if the premium was good for down here, whatnot. It's run too much. You don't want to get caught here and then it continues onto monthly consolidation, right? Don't want that. But that's why I'm playing these. Microsoft, 262.5s, right? Look at Microsoft. Microsoft, 281. Where did I guys say earlier that I liked it in the videos? Mid 260s, right in these moving averages. It will put us about 50% retracement on this entire move up, which is about the 50% fib or the 0.618. You usually get a bounce from that. So that's what I'm expecting if I am assigned. So we also got some SQQQ here just for giggles, right? So I showed you guys that I did a starter position on SQQQ last week down here, right on this candle. As you can see, the trend is still holding up. It's a small position for me just as a hedge, just because I am writing a few other things. So we got some short hedges on here. We made some money on FRC today, not a lot. We wrote some other positions today, not a lot, guys, but we're not going with a lot of size. I need more information. These next 2 weeks for me will kind of just be kind of sideline or small participation, right? Maybe 15, 20% of the account that I'm actually putting into this stuff. So usually I do go heavier than this, but it's just to participate, just to, at least generate some income this week rather than sitting on the sidelines. So I feel that we got some good plays in terms of risk to reward. And yeah, that's pretty much it for the video. Hope you guys liked it. I tried to keep this one short, but there is a lot of plays to go over, right? And it's a big week. So if you liked the video, I appreciate you for being here, guys. Give a like, give a subscribe if you like what I'm saying and whatnot. I really like doing this for you guys. I've been wanting to do these for about 1.5 years now. And I'm so happy that I'm finally doing them for you guys. So I love you all. Hope you had a great day trading, and I'll catch you guys tomorrow. Be safe out there for earnings.